Mutual funds are really popular in Japan, and unlike some countries where ETFs are the recommended option, mutual funds just might be the best option for people investing in Japan. For a few good reasons. So what is a mutual fund? Well, you can think of a mutual fund as a kind of basket, and basically companies put together a fund, which is like the basket, and they buy a bunch of stuff and they put it inside the fund. It's like having a shopping basket full of really useful books. What you can then do is to buy a small piece of the basket. So you can buy a few shares in the basket, and by doing so you also own a small piece of all the things that are inside the fund. Now the benefit of doing this is that you only have to make one transaction, and often a diversified mutual fund will contain dozens or hundreds or thousands of companies, which would otherwise be impossible for you to own all of them, but you can just own a small piece of the basket itself. It's a really cool invention, and it's revolutionized how normal people can invest. How can we buy a mutual fund in Japan? Well, normally you're going to have to go through a broker, maybe your bank, and buy a mutual fund through them. In Japan, mutual funds are called Toshi Shintaku, and they're very common. You can buy them through most banks, brokers, financial institutions. What to consider when you're thinking of buying a mutual fund? There's basically 2 or 3 things you need to worry about. First is what's actually inside the fund. So hopefully you have an idea of what kind of investments you want to buy, whether that's stocks, bonds, real estate, commodities, and so on. Then you would go out, look for a fund that contains those specific investments. Second, we want to think about the fees. So mutual funds have management fees. That's how much it costs to kind of run the fund and make a profit, and they're charged to you each year, but they're taken out of your holdings. So you never really see these fees, they just happen invisibly. Some funds have other fees. So for example, a purchase fee. So that means when you buy the fund, you have to pay a certain percentage as a purchase fee. Some funds have redemption fees, which is the opposite. When you sell the fund, you have to pay a percentage as a fee. In Japan, most funds have now eliminated those fees. Be very careful when you're choosing your funds so that you're aware of all the fees and you've compared them to other options. 3, this is not as important as the first 2, but you might want to consider how old the fund is and how big the fund is, as in how much the fund has in investments within it. The reason these might be important is that basically older and larger funds are going to be more stable, a bit safer. Not safe as in losing your money, but safe as in maybe the management company will close the fund if it's not doing so well. So often management companies will start new funds, they'll see how they do. If they do well, they'll continue running them. If they do badly, they'll shut them down, and at that point you would be forced to sell. So some people prefer to focus on the more established, long-running, larger funds. So you've got a broker, you know what kind of fund you want. How do we actually go about finding one? Well, the easiest way to do so, unless you have a specific fund in mind, is to go to your bank or your broker and use their screening tools. So everyone that sells mutual funds will have some kind of screening tool on their website so that you can search for funds using different criteria. I mainly use Rakuten Securities, so today I'll go through some examples using the Rakuten Securities screener and some of the funds that you can find on Rakuten Securities. Right, let's take a quick look at the Rakuten Mutual Fund Screener. Now, you can use this without being logged in, so you don't need to log in to use it. We just go to Products over here, Shohin, and then we go over here to the mutual fund section. So mutual funds are Toshi Shintaku, and we're just going to go down here to the Super Search. And this will give us a quick look at the 2,616 mutual funds available through Rakuten. Now, obviously, it's a huge number. You don't want to be scrolling through this, so we can use the Super Search to narrow things down a little bit. Let's just go through the different categories on Super Search. If you're using a different broker, they probably have a similar kind of tool that you can use here. So first we've got some keywords like low risk funds or ESG funds or dividend type funds. I would avoid all of these. They're kind of gimmicky. And then we have this section, which is tsumitate. So you can do regular investments. So you can schedule your investments. There's loads of those. Funds that are available in a Nissei account and funds that are available in a tsumitate Nissei account. Now, tsumitate is limited because the government screens the funds that are available in there and to make sure that they are suitable for long-term investment. So tsumitate Nissei funds generally are going to be slightly better quality than the thousands of other funds here. Funds available in iDeCo, only 31. So each provider for iDeCo has their own lineup of funds, and they're normally quite limited. So Rakuten has 31 of them. And then there are these bull-bear things, which I would probably avoid as well. Next thing, so these are funds that are eligible for a 0.5% points through Rakuten Cash. Bit gimmicky. And these other two, I think, are some kind of credit card thing. Next, we've got index funds and non-index funds. Generally, the index funds are going to be more diversified and lower cost, and the non-index funds are going to be higher cost and maybe more concentrated. Then there's types. So we've got kabushiki, which is stocks. We've got saiken, which is bonds. We've got fudosan, which is real estate. We've got balanced funds. So these are funds that have different types of investments in them. So for example, they might have stocks and bonds and real estate, and these are other funds. And then we've got the location. So we've got Japan. We've got global ex-Japan. So these don't have Japan. We've got global including Japan. We've got North America. We've got Europe. We've got Asia. We've got India. We've got Indonesia. We've got China and Hong Kong. We've got Oceania. We've got emerging markets. And we've got Central and South America here. And then we've got these kind of rankings, which again don't mean very much. And there's actually even more down here, but we don't really need to worry about these. When I'm searching for a fund, generally I'm looking for something that goes in a specific account, maybe. So maybe it's Tsumitate Nissei fund. I'm looking for the asset type, so whether it's stocks or bonds. And I'm looking for the area. So normally that would be global for me. So I'm looking for global stocks, including Japan. But you can use these categories to narrow things down quite a lot. Once you've found a fund and you want to learn more about it, the next step would be to find the fund's datasheet. And the fund datasheet or prospectus will normally have, at the very least, what's in the fund, what kind of fees you're going to pay, the kind of risks associated with the fund, past performance, and any other information that the company deems necessary. So let's have a quick look here. So let's look for a fund that's available in Tsumitate Nissei. Immediately cuts us down to 194. And let's look for a global fund including Japan. And then we get this list of funds. And what I like to do next is to sort by fees. So over here we can see the fund name, and so on. And over here we can see the fee. So this is the annual management fee. And we can sort it by low to high, or we can even sort it by high to low. So you can see the difference between the highest in this category, 1.6% a year, and the lowest, 0.1% a year, is enormous. And this makes a huge difference to how your investments are going to perform. Okay, let's take a look at one of these funds. We're going to choose this fund, the eMaxis Slim All Country Fund, because it's one of the most popular funds in Japan. Also very popular on the RetireJapan forum. And we get this kind of info page here. So we can see that there's no fees to buy the fund. This is a purchase fee. You want to avoid funds that have purchase fees generally. And the annual fee is 0.1133%. That is very low and a very reasonable fee. And this is the kind of fees that we'd like to be paying for passive, diversified funds. There's various ways we can buy funds. We've done a video about buying funds. You can check that out if you want to. But we're looking for information here. And these are the data sheets that we can get information from. Let's take a quick look at the prospectus. So we get something like this. And we can see when the prospectus was made. So it was made in July 2023, so last week, basically, when I shot this video. You can see the website for the original company, the company that manages the fund. And we've got all this data down here. So you can see various things. So we can see this is domestic and international stock index fund. We can see that we can see lots of information here. If we scroll down a bit, we can see how the fund is structured. So here, this prospectus tells us where the money is invested. So within the fund, we can see all these countries. So most of the money is in America. 60% of the fund is invested in American stocks and other countries, basically, as you can see here. So that gives you a good rundown. And there's a list of each of the countries. And then scrolling down, we can see the structure of the fund. So most fund prospectuses show you what the structure is. So this is you. So this is the investor. And your money goes into this, the eMaxis Slim Fund. And you are buying pieces of this, and you can get benefit and profits and dividends and so on from this. Now, what the eMaxis Slim Fund does is that it buys these three funds here in order to make up this all-country fund. So these are called mother funds. So they're basically an enormous fund within MUFJ, which is the company that makes eMaxis Slim. And the eMaxis Slim basically buys these three funds. So this is the foreign stock fund, and this is the emerging market stock fund, and this is the Japanese stock fund. And by mixing these three together, you get this all-country thing in the proportions that we saw above. And what each of these mother funds does is they actually buy the assets. So the foreign stock index fund will actually go out and buy the stocks on the market. And they own these stocks within this fund. And then eMaxis Slim is buying a piece of this fund, and you are buying a piece of the eMaxis Slim fund. So kind of 2 degrees of separation. You also own these stocks on the far right. And that's how mutual funds work, basically. And if we scroll down further, we can see you get kind of risk assessment, and you see comparisons here. And this is the returns over time. There's a list of the main holdings. So you can see because 60% of the fund is in American stocks, most of the biggest holdings are kind of big American companies. Returns over time. And then we can see fees down here. This is a kind of memo here. And then finally we get to the good part, which is the fees. So this is important. So this is the purchase fee. And this is a holding fee, and both of these they don't have fees for these things. Some funds do, so you want to be careful here. And this is the management fee. So the management fee is 0.1133%, which is very reasonable. Or actually what they say is it's going to be this much or less. So it won't ever be higher than this, but it might be less than this if they can cut their costs somehow. And then most funds will also tell you what taxes are applicable. So basically, if this fund was held in a taxable account, you would be liable for 20.315% tax on dividends and also on capital gains. This is normal in Japan. And that is it. So those are the main parts of this fund. Next, let's take a look at a different type of fund. So let's get rid of stocks and let's take a look at... Actually, we'll stick with global, but probably not that one. Okay, let's take a look at... Right, okay, so we have to get rid of the Tsumitate Nissei in order to get a bond fund. So I want to have a look at a bond fund. And let's take a look at... Global X Japan, and we get the same kind of lineup sorted for fees already. So let's take a look. Let's not do the eMaxis Slim because it's going to look very similar. Let's take a look at this Nissei fund, and same kind of information we can see here. So we've got the fee, which is 0.154%. It's a bit higher than the stock funds, and we can look at the data sheet again. So it's the same kind of thing. This was made in February. So it's not updated as much as the eMaxis Slim, which is incredibly popular and therefore probably worth updating more often. And scrolling down, we can see Oh, actually, this is quite important too. So this is how big the fund is. So it was started with 100 oku. So what's that? I'm really bad at converting these. That's about $1 million roughly. So this would be like $100 million. And now it's enormous. So the bigger these numbers are and the longer the fund's been established, the more stable you can consider it to be. Not in terms of it going bankrupt or anything, but maybe some companies will shut down funds that are not performing well. So if it's a new fund and it doesn't have lots of assets in it, it might be less stable than an older fund that has a larger amount of assets. But generally speaking, that's not a huge concern. So we can see the same things. This is foreign bonds index and so on. So let's take a quick look at what it buys. So here's the same diagram we had before. So this is you, the investor, and this is they call these baby funds. And this is what you're buying. So this is the Nissei baby fund, and this is the mother fund. So this is the big fund of foreign bonds. And these are just buying pieces of this, which is buying mostly government bonds from ex-Japan, so not Japanese government bonds, and it's the same kind of information in here. Remember, the most important thing is what's in the bond and how much are you going to be paying in fees. So here's the performance and so on. Here's what's in it. So again, America makes up most of it, 50% American bonds, and then France, Italy, etc. And then this is the currencies contained in the fund. And the top 10 holdings are all US bonds, US treasuries as well. So performance, memos, and then the good stuff. So here's the fees. So again, we have an annual fee of 0.154%. And again, we can see here we don't have any purchase fees or holding fees. I think this is a sales fee. So, I mean, some funds would have a fee for each of these, which is really going to affect your returns if you end up buying that kind of fund. And again, we're saying that you'd be liable to pay this kind of tax on this fund. All right, so that was a bond fund. Now let's take a look at something a bit different. So these are both very reasonable, low-priced index funds. But let's take a look at something a bit less reasonable. So let's take the entire fund universe on Rakuten, so 2,616 funds, and let's find the most expensive fund on here. So that's this thing. So this is a deep research China fund, and we can see the annual fee is 2.7%. Now that is outrageous. That is going to chop your returns in half. Probably. If you imagine that if we had a 4% withdrawal rate, that's almost 2/3 of your returns just gone in fees. So be very, very careful with high fee funds. Let's take a look at the prospectus for this fund again. So we're looking here. Okay, so this was updated in May, and let's see. Okay, so here's the structure of the fund. And what this fund is a wrapper. So it doesn't actually own any, on the other funds, you had the mother funds, which are owned by the same company, and they buy the assets themselves. So what these guys are doing is they're actually just buying these two funds. This is an ETF, an iShares ETF for Japanese bonds, and this is a Irish, so it's an Ireland domiciled foreign fund. So it's a mutual fund in Ireland, and most of this fund is basically just buying this Irish mutual fund, and the excess is in Japanese bonds. I guess this is kind of cash substitute. So they're using this as a kind of buffer for extra money. This is an active fund, so they're choosing stocks and they're trying to buy stocks here and they're trying to sell stocks here. And this is incredibly difficult to do. It's extremely unlikely these guys are going to be able to succeed at this. And so they're probably going to underperform and also take 2.7% of your money. So that is not a great thing. So yeah, here's the structure. So here's here's the deep research fund. Here is the Irish fund and the ETF, and this is what they're buying. So the Irish fund is buying large cap Chinese stocks.
And the other one, the iShares ETF, is buying Japanese short-term bonds. Let's see. So there's lots of risk details here, performance, comparisons. So they used to pay a dividend. This is dividends. So obviously they paid a dividend back in 2021, but they haven't paid one since. So that may or may not be significant. Here's the makeup of the fund. It's actually 97% in this Irish fund, 97.9, 1.7% in this bond fund, and 0.3% is actually cash. So they're probably doing something with that cash temporarily. And these are the largest holdings. So these are all Chinese companies. It's very concentrated, you can see. So 10% of it is in this Taiwan semiconductor company and going down here. But you can see that they don't hold all that many companies. It's very concentrated. Here are their returns. Very volatile fund here. And we got some memos. And finally, the fees. So 3.3% is a purchase fee. So when you buy this fund, you'll be paying 3%. There's no holding fee. Thank you, thankfully. Management fee is 1.3%, but the actual cost is 2.7% here though. So roughly in the what would this be? In the range of 2.7%. So this is incredibly expensive, very risky. I'm not sure it's worth buying things like this. And I have bought things like this in the past. So I'm speaking from experience. So this seems kind of cool. It's like, yeah, we buy like special Chinese companies and we're going to make a huge amount of money and we'll charge you these fees, but it's worth it because the returns are there. Yeah, over the long term, I'm not sure the returns are there. So just be very careful with stuff like this. If you're going to invest in this kind of expensive fund, do so with a small amount of your investments and keep most of them in more mainstream, sensible, low-cost index funds.
So how can we go about choosing a fund? Generally speaking, you're going to want to find the cheapest fund in terms of fees that matches what you're looking for. So say you're looking for a international stock fund, you would use the screener, find a list of the international passive stock funds, and then you just choose one of the cheaper ones. You might want to compare the size and longevity of the fund, but that's not as important as the fees and making sure that it matches your investment goals. If you're using iDeCo, you will automatically be buying mutual funds. If you're using Tsumitate Nissei or the Tsumitate portion of the new Nissei, which starts next year, you'll be using mutual funds. And many people choose to use mutual funds in their ordinary Nissei or in their general taxable accounts. So why are mutual funds so good for people in Japan? Well, the biggest reason is that Japanese tax law allows mutual funds to reinvest the dividends internally. What this means is that when companies that are held within the fund pay a dividend, the fund can then put that money back into the fund, grow the value of the fund, and not pay it out to investors. When dividends are paid out, if it's in a taxable account, you would have to pay tax, then receive the dividend, then put it back into the fund. This would cause you to lose money through taxes. If the funds are in a tax-exempt account, like Nissei or iDeCo, paying out the dividends would not be taxed. But when you put the money back into the fund, you would use up more of your contribution allowance. By reinvesting the dividends internally, you don't have to use your contribution allowance, your funds can grow more. This is by far the best thing about mutual funds in Japan. A close second might be that mutual funds allow you to set up automatic investing. So you can go into your account and set up an automatic purchase, pulling the money from your bank account or your broker account, in some cases from a credit card, and that investment will happen automatically every month. You can set it up and forget it. And this is the key to making your personal finances work better. Another nice thing about mutual funds is that they're not sold in units. You instead buy a monetary value of it. So most funds allow you to invest as little as 100 yen and then in 1 yen increments. So say you have, 728 yen in your investment account, you can just put that straight into a mutual fund. If you wanted to buy an ETF or some stocks, you would have to save up enough money to buy a unit of the ETF or one single stock, or in Japan, 100 stocks of the company. And this could take a long time. Whereas with mutual funds, you can put your money in immediately. You can invest with much smaller amounts of money. The last advantage of mutual funds is that generally most mutual funds don't have a purchase fee. So normally if you go to buy an ETF or you go to buy some stocks, you would have to pay a small fee to the broker to cover their costs when you buy the investment. With mutual funds, there's no purchase fees. Instead, the fund provider pays a small commission to the broker. So you're not paying a purchase fee for the fund, you're just paying the annual management fee. And these tend to be fairly competitive compared to ETFs. Now, mutual funds might not be for everyone. For example, if you want to trade stocks, if you want to buy and sell stocks, mutual funds might not be a good fit for you because you can't buy mutual funds instantly. Instead, you put in an order. At the end of the day, all the orders are aggregated, order gets sent to the company. A few days later, you actually get your mutual funds. This is different to stocks or ETFs, where as long as the markets are open, you can buy things in real time. And you can also fix the price that you're going to buy them at. And so if you're trading, these are very important, and you would want to focus on stocks or ETFs instead of mutual funds. However, most people probably shouldn't be trading because you're unlikely to make money, it takes a lot of time, and for most people, passively investing into diversified low-cost funds, whether they're mutual funds or ETFs, is the best way to go. US citizens should avoid buying Japanese mutual funds in many situations. Please have a look at the RetireJapan US citizen page for more information. So what do? I used to own a large number of stocks and funds and ETFs based on ideas that I'd had in the past about buying dividend stocks or about doing clever things with the stock market. But a couple of years ago, I realized this wasn't actually working for me. I sold everything, and now I only own 2 mutual funds. I own a world stock market mutual fund, and I own a developed country bond fund. And that is my portfolio. Just 2 funds. It's very easy. It takes no time at all to manage. And I'm really happy I made that change. My wife has the same kind of setup, plus she has also dividend-paying Japanese stocks in her portfolio. So how about you? How are you investing in Japan? Let us know in the comments below. And if you have any questions about mutual funds, about investing, please also leave them in the comments below. All right, thanks for watching, and I'll see you in the next video.